Hey guys, what's going on? Hope everything is going well. Now I want to do this quick video on gold manipulation. My earlier videos, when I first started out, late 2011, 2012, 2013, I used to talk a lot about gold manipulation. The reason why I used to talk about that stuff was because I believed it, right? All the alternative media, which I trusted a lot, talked about it. I looked into it, and I was like, yeah, man, this precious metal is manipulated. And I talked about the Crimex, I talked about JP Morgan this, JP Morgan that. They inherited a short position from Bear Stearns. I remember all of that. Andrew Maguire, right? Looking back at it, I'm thinking now, you can't use that as an excuse when you are investing in precious metals, or whether you're trading in precious metals, or any instrument whatsoever. We know that there's chicanery going on in all markets, right? Look at the Federal Reserve. Look at what they're probably doing off balance sheet. But once again, the end game, not the end game. What matters is the amount of money in your portfolio, and you want it to grow, right? Whether it's through precious metals or whether it's your brokerage account. And ultimately, if you're losing money, you cannot use gold manipulation as an excuse. You know why? Because you can easily analyze the data coming from the CFTC, the Commitment of Traders report, and you could see when the smart money, the commercial hedgers, when they are having a huge naked short position versus when they have less of a naked short position. Some people say manipulation, can't use that. I listened to a video the other day on the alternative media, and I heard the word manipulate. It's when you're trying to analyze information, you cannot use the manipulation argument. And you need to use logic, science, and just the basic understanding of these markets. So the commercial money, right? Like I was saying, they're the smartest guys. If they are reducing their short position, you may want to take a look. And I did an analysis of the yen versus gold, and they've been correlated for the past 5 years. And you could see if the commercial money in the Japanese yen is starting to go net long, hey, that may be your signal. Hey, gold may be going up higher after that. You saw in December of 2016 and even 2015, you saw the commercial money unwinding their short position in the yen. They're going long yen. They were cutting their gold short positions. And then if you want to look at open interest was really low, okay? Not many people look at open interest. But if you look at December 2015 and if you look at December 2016, open interest was at like what? Multi-year lows. When you see this in the CFTC data, open interest is declining, price declining, that may be your signal, hey, you know what? This may be a good opportunity to go long. And then on top of it, you have to look at when open interest is going high and the commercial money is increasing the short positions like in August, then that may not be the time to go long gold, right? You got to pay attention to the commercial money, the hedgers, right? And the irony about the commercial money and the retailers who sell you gold and silver saying you should buy at any price, some of these guys, I'm sure, are hedging in the paper markets, right? Which they talk about manipulation. They're the ones probably naked shorting gold, naked shorting silver. You know why? Because they want to hedge their losses if the price of gold and silver go down, right? They buy gold and silver, right, at a certain price, and they try to make a profit off of it. Make sure that the price is a little higher when they sell it. What happens when the price goes down? They could get smoked if they're not hedged in the paper markets. And so when I hear these stories about manipulation from the retailers, it's just a bunch of silliness, because I'm pretty sure they are naked shorting silver and gold in the paper markets. And then the other thing, from a fundamental perspective, looking at gold and silver, when interest rates go higher, I've talked about this in the past, as long as these interest rates are below the market rate, and then on top of it, if you see that the deficits are increasing, right, that may be your signal to go long gold. What happened in 2015 and 2016, December of both years, you saw price of gold going down before the interest rate hike. Interest rate hike occurred. You saw inflation starting to pick up. You saw gold prices start to pick up. Commodities started to rally. And you could say, why would they rally when interest rates go up? Well, number one, you have interest income going to all these people. It's increasing. And then two, with this fractional reserve banking system, right? Higher interest rates are actually good for the banks. That's why the banks tend to do better in a higher interest rate environment, as long as these interest rates are below the market rate. So when people say, like, hey, there's gold manipulation, this and that, you get all pissed off and irked and mad, you know what? Don't get mad. Just look at past data, look at the fundamentals, look at the data from the CFTC, and make your investment decision based on what the commercial money is doing at price extremes or at major extremes. When they're heavily short gold and silver, you're looking back like 3-4 years, that may not be a good time to buy gold and silver. This is when people are going to get really, really excited about gold and silver and say, oh, it's going to go to 1,500, 1,600, this and that. You may see the sentiment change. And what you want to do is, when you see everyone happy, look at this data. If you see open interest going up and the non-commercials are buying, the non-commercials are not the smart money, and you see commercials heavily increasing their short position, I wouldn't buy at that price. So this is really important to look at. And then the other thing is, people always complain about manipulation, this alternative media. Well, the thing is, number one, if you are looking at it from that perspective, look at it how you look at economics. Most of you guys are libertarians, and you say about poor people or people who are having a tough time, you got to pull yourself from the bootstraps. I'm not saying you got to pull yourself up from the bootstraps when investing in markets. I'm just saying that you can't use these excuses of manipulation, because if you use this excuse, you're going to lose, and I have lost. My dad used to ask me when gold was going down, and what did I used to say? It's going down because of manipulation. Well, I was losing money then. That is not an excuse. You got to look at the data, look at the CFTC reports, commitment of traders, look at what's going on with fundamental analysis, and make your decisions based off of that. You can't look at some of the other YouTube videos that are saying buy at any price, buy the dips, dollar cost averaging. You're most likely going to lose. Unless you're like averaging down at the bottom, averaging the most down at the bottom, you're most likely losing. You're underwater. So that's really important. Do not use gold manipulation as an excuse. If you do, you are most likely going to fall into the trap like many people have, and you are not going to make money in this. Anyways, guys, I'll talk to you later. See ya. Bye.